Welcome to the Real Estate Professional Status or Rep Status mini lesson. This is going to be a very popular mini lesson with a lot of great content. It's a question we get at Teaching Tax Flow all the time when we're trying to figure out if a taxpayer has obtained rep status with the Internal Revenue Service based on those rules. The rep status has some advantages, especially if you are in that red diagnosis, meaning high marginal tax rate, to allow you to accelerate some deductions. But we're going to dive into that as we work through this type of real estate activity in our AIM matrix. Talked about rep status a little bit. We're going to look at Treasury Regulation 469C7, a little technical here, to figure out what you need to accomplish to qualify for rep status. A very important part of that is keeping track of your time. We're going to give you a sample log. We're going to look at a rep status chart. We're also going to show you on Schedule E, from a technical perspective, how you would report a loss from a rental property if you're rep status. And then we're going to have our calls to action. So let's dive in. There are two qualifications required to obtain real estate professional status, according to the Internal Revenue Service. We're going to look at those right now. First one, more than half your personal services performed in trades or businesses by the taxpayer has to be in a real estate property trades or business in which the taxpayer has material participation. We have a whole nother mini lesson on material participation. But this is very important right here. Now, understanding that although being a homemaker is a very challenging job, that is not considered a trade or business, all right? And remember that either a taxpayer or a taxpayer spouse can obtain rep status, and both of them can enjoy that. Second, so 50% of your time, professional time, we know that. Second, taxpayer performs more than 750 hours of services during the tax year in real property trades or business. So that means that if you're a full-time W-2 employee, it's very difficult. It's difficult to obtain qualification number 2, but maybe you're a workaholic and you just put a ton of hours in, but it's really difficult to hit number 1. Now, the other question we get often is what type of activities qualify for this time? And we're going to leave that here. There are several of them when it comes that are all listed here. I'm not going to read them for you, but you can clearly see that. And remember, you have to have material participation in these activities. So if you're just a W-2, if you're a W-2 person and you own no equity in a property management company, those hours don't count. Taxpayer must own 5% or more of a business for the hours to count. So that's another important consideration. Time tracking. Make sure you log your time when it comes to your rep status. This is a sample log. Your log can be in Excel. We have an amazing partner that has software that allows you to track your time electronically using an app. But regardless of how you track it, make sure that you're including your name, the date, the hours of service, what you did, and the property address, okay? Because you can aggregate a lot of these hours. But this is a great sample time log. Talked about that chart, all right? I know I laid it out in that second slide, but we like to use visual aids in teaching tax flow, as you know. So really look at this. Walk through this when you're determining your rep status. Do you materially participate in a trade or business and you own more than 5%? Great. This gets us tripped up a lot of times when you have, maybe you're investing in a limited partnership and you have a very small percentage and you don't have material participation. But assume you have 5%. You're spending more than half your professional time. You're doing these services. We have that list. Did you spend more than 750 hours performing real property trades? Yes. You do pass go. You do collect $200. You are rep status. If you don't hit yes on all 3 of these, you are not rep status. And you don't pass go when it comes to this particular test. And remember, your spouse, we're going to go back here. If your spouse hits rep status, that means you guys, if you file jointly, you both are rep status. We talked about if you're rep status and you have that rental property, here's a sample Schedule E. This happens to be a long-term rental. Right here down in line 22, this is where if you're not rep status or you don't have material participation or you are subject to those passive activity loss rules, you will not be able to deduct the loss. So on this particular situation, Joe and Jill tax flow, Joe has rep status. Because Joe has rep status and he has material participation in this rental property, he can deduct the loss from that rental property. Let's tie a bow on this. First of all, figure out if you have rep status, either you or your spouse, based on those IRS regulations. Keep a detailed log, I know I keep repeating myself, of your time. If you have rental properties with that material participation and your rep status, really consider having a cost segregation study done, especially if you're in that red diagnosis in our teaching tax flow system. A lot of times that cost segregation study will trigger a loss on your Schedule E, and that loss can offset your other income. If you have several rental properties and you have rep status, consider making the rental grouping election, Section 469C7A. We have a whole separate mini lesson just on that rental grouping election and some content there. All right, thanks for watching this mini lesson, and have a great day.
John here from Teaching Tax Flow. I wanted to thank you for watching this video. We literally have hundreds of hours of content between podcasts, webinars, videos just like this built specifically for you, the taxpayer. Whether you're a full-time employee, you're a freelancer, you're a contractor in some other sense, or you're thinking about getting into business for yourself. Everything here at Teaching Tax Flow is perfect for you, basically going off of the roadmap provided by the IRS to legally and ethically reduce the taxes paid over your lifetime. So be sure to subscribe to this channel and connect with Teaching Tax Flow, and we will see everybody very soon.